Michael, welcome to the show.
Jeff, it's great to be with you today.
Thank you for making time. I know you're incredibly busy, in great demand, having just come back from a conference. We're going to talk about that. But for the listeners who may not know who Michael Hammond is, tell us about you and your company.
Michael Hammond is a 20-some-year veteran in the mortgage technology space, former CEO of Mortgage Cadence. I'm a certified mortgage technologist, chairman of the board for a credit union here in Michigan. Almost my entire career has evolved around tech, mortgage technology, financial technology. And what I do now is I'm the president and founder of Next Level Advisors. We've been in business for over 12 years. And our whole goal is to help other technology companies grow. We do that by, we help them engage their audiences, generate leads, drive sales, and create compelling brand stories.
Love that. And that is a great place for us to actually enter the conversation, because you work primarily, if I'm correct, in the mortgage space?
In the mortgage technology space, that's primarily where a lot of our technology vendors are. That's where a lot of our customers are. But really, it can span across financial services. So we've had servicing companies, we've had property preservation, default management. You're starting to see a lot more on the real estate side of it, and that convergence of loan officer and real estate agent, and who has the borrower first, and what's going to be more sticky, and who had that touch point. So anything that falls into that realm, we think we can help technology providers grow.
Okay. So you're seeing a pretty diverse cross-section of companies in the mortgage FinTech space out there. And this is why I wanted to have you on today, is because, you have visibility and access to what companies are actually doing to address, what you said at the opening, which is move audiences, generate leads, drive sales, and ignite powerful brand stories. That's a lot. And I think that's a lot, a few of those things definitely our listeners have an interest in. But can you unpack that just in the context of like a mortgage company, right? The space we're in, the FinTech, the disruption that's happening. What do you have companies asking you most about right now, most help with?
I think where they're really struggling is that convergence of traditional media and self-publishing.
Mm-hmm.
So companies want to get their name out there. They want to get brand recognition, or the individual LO wants to get their name out there and be the known name in that specific demographic or region. And they're struggling with, traditional ads. Do they still work? Maybe, maybe not. For the right purposes. Can you get an article published? Yes. But if I'm an individual loan officer, somebody in corporate communications is probably taking care of that. So how do I get my name out there? How do I establish my personal brand? So we get a lot of questions around that. And then it always leads to, Michael, I don't know what to do with social media, or I don't know how to get on LinkedIn, or why would I jump on Instagram, or there's no way. My kids are on TikTok, and what the hell would I do with that?
Yeah.
So we really try to help them unpack from a corporate perspective, and then from that individual personal brand, what's the best way that they can tell their story in a compelling and differentiating way so that they can stand out amongst the crowd.
In regards to FinTech and all the buzzwords and the whole disruption, let's take it down to the loan officer perspective. What level of concern do you think the individual producer originator needs to have about the tech disruption?
I think they have to have a healthy appreciation for it. I'll call it, whether you want to call it the Amazon effect or the Zillow effect. If people can go in, if you look at what's happened in the mortgage industry, the cost to originate continues to rise. Depending on what study you look at.
Which, by the way, not to interrupt, but why is that if tech is getting so much better? I read the other day that roughly, I figured it was Fannie Mae who said roughly $9,000 to originate a purchase transaction.
Right, it's crazy. You look at it and say, why does manufacturing alone continue to go up? Now, you can look back a few years back and say, well, when the CFPB came in and there was a ton of more regulation, you could see where the cost. Lenders had to hire attorneys. They had to have compliance staffs. I get some of that. But what's happening with a lot of the tech is, and why disruption, I feel, is going to come into this space, is there's still a ton of inefficiencies.
Yeah.
So 3, 4, 5 years ago, all of the talk was about the point of sale, thinking that that was going to be the magic button that would solve and deliver an incredible borrower experience.
Mm-hmm.
And what lenders are realizing is that wonderful website or that mobile app so the loan officer can do whatever they need to on the weekends, off hours, and deliver what that borrower is asking is only part of the equation.
Mm-hmm.
If you do all of this great stuff at the point of sale and it still takes you 45, 50 days, 60 days to close on the loan,
Yep.
It's not a great borrower experience. So why an individual loan officer should be, somewhat worried or at least have a healthy appreciation for fintech of an Amazon or a Zillow coming in, what they're going to do probably better than anyone has so far in the industry, or at least in the last 5-10 years, is they're going to automate a lot of the manual tasks on the back end of the process.
Right.
That is taking up those 10 days, 15 days, 20 days. And the longer those days go, the lower the lower the borrower satisfaction is, and the higher the cost it is to originate that loan. So that's where some of this is going to come in. Now, they should have a healthy appreciation for that because it means they're going to have to up their game. Now, one of the things that the disruption probably can't do is they're not going to know that individual location. They're not going to know that individual demographic as well as that loan officer or that real estate does in that specific community.
Mm-hmm.
And so it's going to be critical for them to have better and more engaged relationships. Now, can they use technology to take care of some of the manual stuff so that they can spend more time with the potential borrower, educating them, providing information to them when and where they need it?
Mm-hmm. Yeah, it's funny because I was doing some research for my book coming out here in a couple of weeks, and I'm trying to pull up the actual data point on that. But in the terms of so blockchain, right? You mentioned AI, blockchain is another thing. And so to your point as well, I'm glad you brought up the point of, people throw around buzzwords and all that kind of stuff all the time. And we need to put in the right context in the reality of something like I was reading regarding blockchain having the potential to issue a full-blown mortgage credit approval in 10 minutes, right?
Right.
I mean, but how far off is that is still quite a ways off.
I would agree. And again, that's only a fraction of the entire mortgage process.
Mm-hmm.
So even if you can get that done in 10 minutes, if all of the other processes haven't been touched and it still takes you 45 days to close on the loan,
right? What good is it?
What good is it? It didn't really improve the borrower experience. All it did is magnify one area of the process. And that's why I think holistically lenders have to look at it and say, if we're going to look at it from a borrower journey perspective, that's where it's going to have the impact. And I think for too long, the mortgage industry has looked at a mortgage as a transaction. Mm-hmm. It has not looked at it as a relationship with the borrower and understanding that the borrower, over the life of that borrower, they may get 7 to 11 loans over their entire life. So if the focus, if the technology, if the automation processes view it more from instead of a single transaction to really a borrower for life, you're going to see a lot of the other technologies that are going to come in and streamline more of the entire flow than just saying, hey, I got a credit decision in 10 minutes, but it's going to take me 2 weeks to underwrite the loan.
What do you see as the company's appetites to be willing to invest in this kind of technology?
Well, I think what's helping with that is the Amazon effect. Mm-hmm. If the borrower is getting an incredible experience on all of their other purchasing decisions, whether it's online, whether it's through Amazon, whether I can order a car, now the consumer is being conditioned. Mm-hmm. I should expect that if I go on Amazon and I click and I order a book, I'm going to get it later today or tomorrow. Mm-hmm. And if I can go online and I can order a car and now it's going to pull up in my driveway in the next day or the next 2 days, why can't I do that with my mortgage? And why is my mortgage taking 45 days? Mm. If it was left just to the lender, I'd say we've still got a long way to go. Mm-hmm. But with the borrower now forcing the issue, I think more of this fintech is coming into play. That's why you saw, a lot of people investing in the point of sale and really trying to improve that point of sale. almost everyone I talk to, you mentioned the conference I just got back from, the next conference in Dallas, Mortgage and Women in Mortgage Technology Conference. And one of the key words that almost everyone mentioned that I interviewed and talked to was, we've got to automate the back end of the process. We've got to automate the back end. So I think the appetite is increasing.
Mm-hmm.
One of the other things that almost every lender says to me when I say, well, then how do you vet technology? And if you're going to embrace new technology, what is a good decision? And then it all comes back to if it doesn't fit into my current tech stack, I don't care how cool, I don't care how shiny or how many promises, we're probably not going to move forward.
You're saying that's what companies are saying?
That's what lenders are saying. When I ask them, how do you vet technology? What are some of the most important things when you're looking at technology? They say, if it doesn't fit within our current tech stack, we're probably not that interested in moving forward.
That is very interesting. So that sounds to me like those that are willing to adapt then will wind up beating that person that's not.
Exactly. And then the other comment that they always make, and this was a great comment, it was from Kevin Perenio over at BRMG, that said it needs to be noticeably different.
Okay. Do you think that's valid?
I think it's very valid, and here's why. If you look at almost every aspect of the mortgage process already has current technology. So there's technology to audit credit, flood, title appraisal. There's loan origination systems. There's POSs. There's doc systems. So it's a displacement sale. You've got to displace somebody. So if you're going to displace somebody and have them rip it out of their current tech stack and fit into their tech stack and have that new solution, if it's not noticeably different, if it's not providing a significant value, then let's move on and automate a different area or aspect of the mortgage process, because we're not going to get the ROI on that.
What other areas, though, are there to optimize or improve, right? Because we got the front end. Now, this obviously by individual company is different based on what they've invested in or not. But in general, the front end process of applying for a mortgage has been greatly improved, right?
I would agree with that, but if you even take it a step back before them taking an app, I think there could be a ton done on the front end of lead generation in the mortgage space. There's a lot of people running around creating leads, selling leads. Are the leads validated? Have they been scrubbed? More importantly, is that lead provider selling the same leads to ABC Mortgage Company, XYZ Mortgage Company?
Of course they are. So the business model.
That business model. So that's a struggle. I think the other thing that's happening where you're going to see a lot of innovation and some disruption is how to better engage the borrower.
Okay. You got me on that. I'm interested in that.
The point of sale has a website, and that's great, but how do you get the borrower to the website? And more importantly, how do you continue to stay engaged if we're looking at it instead of a single transaction of a long-term relationship and a borrower for life? So there's a lot of new automation out there and a lot of new tech out there that is using phone messaging, voiceless messaging, is using text messaging. If you look at a lot of the studies in the mortgage industry, very few lenders are embracing texting yet, but the response rate is typically about 80 to 90% within 2 minutes.
Is there an excuse you hear about the texting thing?
Well, I think it's a comfortability for lenders. Well, I don't know. That's pretty evasive. I don't want somebody to text me. Well, years ago, they didn't want somebody to call them. And then a few shorter years, they didn't want somebody to email them. I think the progressive lenders are using text. But I think the key is you have to have a platform that is multi-channel. So that you have text, you have email, you have voice. And when you combine it, what you're trying to do is not bother the hell out of the borrower, right?
Yes.
So if I send them 10 texts in 2 hours or in 2 days, I'm irritated and I'm annoying. But if I have a system that can automate it and say, okay, the first day I'm going to call, the second day they're going to get a text, the third day they're going to get an email, and then the fourth day I'll pick up and follow up with another call. Those are different touch points that are not as annoying. And if you have the right sequence and the right workflow built in, they can be very, very effective. So I think there's an area not just with point of sale, but prior to point of sale that can help out quite a bit.
Sure. During kind of like the dating phase, right before you decide to get engaged, the kicking the tires, all that.
Exactly. And then as we talked about, I think social media can have a great impact on that also.
Yeah.
Right. And you've got to go to where your potential borrowers are at. So depending on the type of loan programs that you offer, depending on, are you consumer direct, are you retail, are you wholesale, what is it that you are, the better you can interact with your potential borrowers, whether that's on Facebook, whether that's on Instagram, whether that's now on TikTok, or, you've got to be where your potential borrowers are at. And it's not always with a sales pitch.
No, right. 100%. Yeah. Yeah, it's very interesting. So it's a whole conversation in and of itself, engaging with prospects, clients, and things like that. You mentioned texting. I agree. I think there's a big opportunity for people to integrate texting in a variety of ways, which brings me to the research I've been doing recently also on messaging apps, whether they're chat bots or Facebook Messenger and things like that. What most people, and I didn't know this either, is that according to, this is a quote from Debbie Doherty, head of marketing at Viber, which is a messaging app. And you probably know this well, but most of the amount of time people spend on messaging apps is actually bigger than social media. Right. More time spent on messaging apps than in social media.
Yeah. I mean, everyone's got their phone. I don't care what demographic you fit. Almost everybody is walking around with a smartphone. And what are they looking at? They're always looking at the text. They're always responding to a text. And then they get on social media. And it's not that social is a bad platform, but I agree with you. Text is where a lot of it's at. And quite frankly, a lot of lenders aren't leveraging that as well as they could.
Yeah. And just to go on here, a survey from, I've got all this so readily handy right now just because of the book, but a survey from BI Intelligence talking about chatbots, that more than half of the users between 18 and 55 are using chatbots. And there's more data about how customers, 45% of consumers say they would choose them over email to get in touch with a business and all that. So this is just in the context of thinking about the customer journey and how do they prefer to engage with you in those early stages.
Exactly. And I was talking to a lender the other day, and they said 78% of their loans that come in after hours.
Yeah, exactly. Right. Yep.
So how are you interacting, whether it's a chat bot, whether it's a live chat and somebody is on that 24/7, or do you have automation that is going to send them the information they need when and where they want it? Right. A borrower is going to work, traditional borrower is going to work all day. They're going to come home. They may have kids, a spouse, they're going to have dinner, they're going to have to do the homework. And then guess what? They put their kids to bed, and now it's 10, 11, 12 o'clock at night is when they're going to start looking at what loan programs are going to fit, who's got the best rates.
Yep.
And if you're not meeting those needs, whether it's through chatbots, whether it's through AI, whether it's through text, you're missing out on a huge opportunity.
Yeah, they're going to sit there with this device while they're watching Netflix,
right,
and browse some websites and social media and try and find the information that they're looking for.
Absolutely.
Yeah. It all comes back to the UI, right? The user experience, user interface, that kind of stuff. So I think the big question from this is yeah, are we, it's like, I forget who said it, right? Are we being a modern, a savvy communicator using today's contemporary tools?
Right. And right now, I think that's the struggle. So, if somebody comes in and says, hey, we know how to use technology and we can put a lot of these systems in place, and so we can respond to the potential borrower within 2 minutes or within 5 minutes, and it takes a credit union 2 days to get back, who's going to win the business most of the time?
Do you help companies in setting up, their lead generation strategy?
We do. And again, depending on what lead gen strategy they're focusing on. If they have a call center, can we train their callers? Yes. But am I looking to create a whole call center for somebody? No. I mean, there's enough ways out there to do that, but can we help with that? But a lot of it, you really have to understand what is your potential borrower's journey. And I don't think a lot of times people take the time to understand what that journey looks like. What are those different touch points? What are the different channels that they interact with? And how can I best leverage technology to create greater efficiencies, right? A smaller credit union, a smaller lender could be very efficient in using some of the technology just to respond to a potential borrower in after hours, the same way that a B of A or a Wells could.
Mm-hmm.
Right? So technology can level the playing field for some if used properly and implemented at the right time.
I was thinking about this question. You don't have to name names if it's not appropriate, but I was thinking about who do you see adapting, and making the pivots that are going to be required. And do you see that happening more in the mid-tier, small versus the big, 800-pound gorillas?
Right. I would say it's probably mid to mid-high.
Mm-hmm. Because they have the
People
budget.
The super big have a trouble because they can't be as agile. Right. So it's a lot harder to turn that massive ship for them. So they're going to kind of pick and choose. They're going to see what's going on out there, and then they're going to implement and execute. Mm-hmm. That middle high, they have enough money, they have enough resources, and they're growing. They see that they can grab market share. They see that in this new decade of lending, mm-hmm. if you're doing what you did 5 or 10 years ago, you're probably not going to be around in another 5 or 8 years. Mm. So those companies, I see that they're large enough to have the resources and the insights and the drive to, really implement. Yeah. Those are the ones that are doing it probably the most. And then you're going to see some of the startups, some of these smaller lenders that say, hey, there's a better way. I can do this with the Salesforce. I can do this with another product. I can reach out and engage with people. I'm using, Facebook. I'm using Instagram. I'm using some of those tools. Those are probably the two groups that I see making the biggest impact. Mm-hmm. The people that are, at the bottom end of the low are probably laggers and late adapters, and they're going to be really in trouble if they don't start embracing the technology and finding out how that technology can be used mm-hmm. to really free up their people. Because the other thing that's going to happen is more things get automated. Mm-hmm. There's going to be a huge demand for top talent, whether it's a loan officer, whether it's an underwriter. And what I mean by that is the technology is typically going to automate the easy and manual repetitive tasks.
Yeah.
So let's just use an underwriter, for instance. Mm-hmm. If you can automate and manually handle a lot of the easy tasks in underwriting, then what type of underwriter do you need? The entry-level underwriter? No. You need the one who can be exception-based and really understand how to deal with the challenging ones that couldn't be automated and couldn't go through that manual process. Mm-hmm. And so there's going to be a huge battle for top talent. And I think the companies that can deliver great technology and make it easier for that top talent to do their job, whether it's the LO and tools to bring in new leads, tools to communicate more effectively with their borrower throughout the whole process, those are the companies that are going to win the battle for the top talent in my mind.
So you think the threat, the disruption threat within the mortgage space is perhaps first and foremost or most impactfully within the operations side versus the sales?
I think it's going to impact both, but I think in the near term, yes, I would say operational side more. Mm-hmm. Because you can still, the tools are available for the loan officer to get on social media and start doing a lot more, right?
Yeah, right.
And it's going to become more about engagement than having a bot that's just going to go find 5,000 followers, right?
Right.
So
sure.
I would say the back end is going to be impacted first by disruption because they're going to take care of those manual tasks. They're going to cut the closing days instead of 45. Can they get it down to 28? Can they get it down to 20? That's where the disruption is going to have its biggest impact first. Then they'll move to more of the front end or more of the lead gen. But again, some of that when it comes to engagement, you can't automate all of that. You want to automate the tasks that you can so that people have more time for the engagement and what the borrower is looking for in that experience.
Yeah, and that's an interesting discussion as well, if I could bring that back up here, because even with the advent of technology, and you know this better than most, is that people want a blend of both, really.
Right. It's not an all or nothing proposition.
Mm-hmm. Yeah. They want to be able to have the convenience of finding the information and on their phone and having the simple front end app and maybe getting questions answered at 10 p.m. at night and not having to wait till 9 a.m. till you open and all that stuff. But then at the point of where they're ready to move forward, that's where they're looking for the professional guide, the advisor.
And exactly. And that's where you're going to have that battle for top talent, because the loan officer that can provide that guidance, that insight, not only to the local market, but why a 30-year would be better than a 15-year, than an FHA product, or, a jumbo loan, or whatever it may be. When that person turns to a trusted advisor, and the biggest challenge right now in the mortgage industry is it's not just, baby boomers do this, millennials do this, Gen Y does this. It's a blend, so you can't just have a one-size-fits-all proposition back to that end borrower.
Do you spend a lot of time looking at the iBuyer market?
I think it's coming up more and more. I think it's one of those where conceptually, kind of a cool idea. Conceptually, they're starting to get their legs under them a little bit. But when I talk to lenders, you don't hear a lot of lenders totally threatened by the iBuyer at this time.
Oh, from the mortgage side? Yeah.
From the mortgage side, I don't see that. From real estate, you probably, and I know you talk to more realtors and everything else than I do, you're probably seeing it on their side a little bit more.
Yeah, for sure. Yeah. In particular markets, of course, Arizona, where I'm here in Nevada. I forget the last stat I saw. Open Door, of course, is the leader in Arizona. I think they were anywhere between 6 and 10% of the market transactions in Arizona.
Okay. So I think from the real estate, hey, that's something I got to be readily aware of right now. I think from the mortgage side of it, the panic button has not been hit yet. It's more of, I've heard about the term. I kind of see it happening out there. Let's wait and see until it impacts my business and my bottom line.
Yeah. Interesting stuff. I know. And of course, Zillow now becoming a mortgage company. And again, I think that goes back to kind of what we talked about originally, is like the buzzwords and the AI, and people tend to focus on either what's bright and shiny, right? Because it's sexy and new. TikTok. I have a whole rant on TikTok. Or what sounds threatening and looming, because it gets attention.
Exactly. It gets attention, so everyone's jumping on it. But what is the AI doing? If you can say it cut out these 15 steps and it took from 10 days to 2 hours, then there's that's real. If you talk about on the back end of the mortgage docs, and you can use AI and visual recognition, and now it can store all of that loan information. And now I have it at my disposal, and it can go and clean up those loans, and it can automate certain things on the back end. Okay, then maybe there's some validity, but just throwing AI out there, and you can go to any trade show and you see it on a bunch of booths, AI and everything like that. I think right now lenders are kind of fascinated by it because it's a shiny object, and they're also, a big portion of them that are still very skeptical, saying, so what is that going to do for my business?
Yeah. You do some work in helping companies, going back to kind of your bio here, generate leads, drive sales?
Correct.
Is there a particular place you see companies being more successful in terms of generating leads? I assume that's online.
It's online. It can be in person, because again, the mortgage business is still about relationships. So if we take, a tech company who wants to sell into banks, lenders, and credit unions, they still need to be, you can't do it all online, right? Somebody is not going to buy a loan origination system just because they saw an online demo. They're going to probably want to meet people. They're going to want to talk to your prospects. They're going to want to research who are the other lenders in my area or at my size that are using that system and have had success with it. So when we talk strategies, I think engagement is critical. I think a tool, especially from a B2B perspective, LinkedIn can be very, very powerful. And I think there's still a lot of executives that are scared to use LinkedIn or say, I don't see the value. And what I can say, and I'm sure you have this same experience, you go to a conference now and people are like, hey, Michael Hammond. And now I finally learned, I'm like, LinkedIn. And they're like, yeah, we connected on LinkedIn a month ago, 2 weeks ago, a year ago. So what it does now, though, is going to those conferences, people feel that they know me. They've seen a video, they've listened to a podcast, they've seen an interaction like this, so that when I meet with them, they feel that there's a little bit of history and we can have a deeper discussion. And then the whole relationship is then enhanced and moved forward. So we'll give a lot of tactics to help companies in how do they improve engagement, and how do they leverage in person, using technology, using text, using social media platforms, using email marketing automation to really make sure that they're visible and highly relevant to that company when they're making that purchase decision.
So you're a believer in personal brand?
Absolutely.
Both companies and individuals.
Yeah, and I think too many companies are scared to have some of their individuals create a very powerful brand, and they feel very threatened.
Right.
The owner of a tech company is going to get very threatened when, let's just say, their director of sales and marketing or PR or their customer success manager now starts becoming a household name, and they're not. And what I have found is if people create an incredible brand for themselves, all it does is enhance what they say then about that company. We looked at, you look at somebody like a Chelsea Pikes. I heard her speak at Housing Where Engaged last year. Does everything she do on Instagram or a book, is it all business related? No, but people by watching, what she's doing on Instagram feel they know who she is. So then when she says, hey, this is what's important to engage as a financial institution, for a realtor, for a loan officer, for an executive, there's much greater believability and much greater trust because they've already feel that there's that great personal brand, and they feel that they somehow know that individual. So I think it's a huge area where a lot of companies are missing out by not embracing personal branding and letting their teams really run with it. I know the corporate communications people want to control all the messaging, and we want to have one voice consistency, but people buy from people they know, people buy from people they like. And they're not just buying from that company, they're buying from the sales team, the marketing team, the customer success team. So I'm a big proponent of personal branding. And I think that's where a lot of companies are going to see that convergence of personal branding and still taking advantage of traditional, whether it's PR, whether it's marketing, whether it's, getting articles written, interviews and everything like that. That convergence is happening.
Well, let's kind of close out on that thread of personal branding, because that's the age that we're living in now. And that is, I think, a struggle in full transparency. I know it's been for me in being personal out there and putting it out there. Any advice or tips on how people can make that transition to having a more kind of public persona?
I think for the first thing is you've got to start putting yourself out there. And I'll share a story. Last year when I was at Housing Wire Engaged, and they kept talking about it, and you can see I've been in the industry a number of years, over 20, so I'm not the youngest guy on the block when we're talking about personal branding and social media. And what I really looked at is I had to take a look in the mirror and say, I don't want to be left behind. A year ago, I didn't even know how to take a selfie.
Yes.
But in listening to speaker after speaker talk about the power of video and how important it is to get your personal brand out there, what I realized is even though we were doing a lot of great things, a lot of great strategies and helping companies grow, we always were doing it on the back end, and people are like, who is this Michael Hammond
You're a secret.
guy? And I didn't want to be the best kept secret anymore. And so the best tip I can say is first get started, and then I would share things that you're passionate about. If you don't want to share your kid's age and don't want to show pictures of your kids, great. Don't do that, but you can still share your personal opinions on some aspect of the mortgage business. Or I do a lot on leadership when I do a weekly LinkedIn video. So it may be on leadership or pain points that people are addressing. So it may not be personal aspects of exactly when I graduated from high school or that I'm married and the age of my kids and exactly what they do, but I can still share a personal side of myself where people can feel like they've gotten to know Michael Hammond a little bit better without necessarily giving away everything.
And that is the shift, I think, just to highlight that once again, that is the shift that for those of us that have been in sales or the business world for 20 plus years, that is what's happened is people now want to do business with, like you said, the old cliche, know, like, and trust, but they actually do want to feel like they know you at some level. So to your point about Chelsea, that's what it works very well for Chelsea. Is she creates this personal connection and following with people who now become fans, Right. And it's a bit weird to take on, But I think then you realize like this is the world we live in, that, people want the transparency.
They absolutely do. And it people think, okay, well, you're creating all of that, you make it all about yourself. It's not about patting myself on the back and just saying, hey, I'm awesome. I try to share something. I've seen a lot of posts recently on LinkedIn where people saying, hey, I'm really struggling with this aspect. And the way I phrase that is they're being genuine and authentic. Mm-hmm. They're not trying to sell someone instantly. They're sharing part of the struggle, whether it's being a loan officer, whether it's being a real estate agent, whether it's a tech vendor, but that genuine, authentic sharing, commenting, and not just a drive-by social post and clicking like, but actually saying, hey, Jeff, that was a really good insight. I liked how you shared X, Y, and Z. Mm-hmm. That just builds better relationships. And right. Social media and LinkedIn and all of these others are just a tool to help build that relationship, just like the phone was how many years ago, just like email then became. It's another tool, if used properly, can really foster great relationships out there and improved engagement.
Yeah, and I guess lastly on that, talking about how times have changed, and we're talking about tech through this conversation, texting. So, I mean, the way to engage and connect with people has changed. They used to answer the phones. They used to take office meetings, right? I mean, people don't really do that anymore. So how do you reach people? You reach them, of course, the mediums we're talking about.
Exactly. And I think one of the comments that a lender said to me from this last conference, before I agree to any of those product demonstrations, I look the people up on social media and find out, do they have a presence?
Yes.
Not only do they have a presence and what are they saying, who else is following them in my circles? And if the answer is 0, then you know what? That demo is probably not going to happen.
Interesting point. That's a credibility thing.
Absolutely.
It's like the version of online reviews,
Right. And they're looking and saying, who in my circle? I had the other day a vendor reach out to me and want to talk to me and kind of pick my brain. And then they said, oh, by the way, I see you work with and post a lot about this other company, and we're really interested in talking to them.
Interesting. It's all connected.
And that's all from the online personas that are out there.
And that's all happening without you even knowing it.
Right.
So you might be getting not even invited to the dance just because of that.
Exactly.
Interesting. I heard once, I interviewed an agent once, and, people sometimes challenge the whole, hey, do I need to be online? I'm still doing business, all that kind of stuff. And I like the way he put it in context. And we all know this. People are going to look you up before they call you for the referral and all that. But, he said how like online today, your presence online, you are being judged by your online presence because it is the yellow pages of today. Right?
Absolutely.
Like if I can't look you up, how can you be legit?
Right. I mean, the people who have a LinkedIn profile and no picture.
Oh my God.
Credibility just dropped. I mean, it's amazing that people still do that. And they're like, well, I didn't want to put my picture. I posted something today that LinkedIn now has partnered through Microsoft. Since Microsoft owns LinkedIn, you can go into a Microsoft store and get a new LinkedIn headshot for free.
You posted that? That's where it came from. I saw that.
I saw it from someone else. So I was not the original poster, but I shared it at least in the financial services sector today by passing that along.
Yeah, exactly. Actually, it made me think maybe I should go in there and do that. But I'm like, wow, I have everything here. So, but great share, great informative share. And that's an example, right? Curate that little piece of content and just feed that off to your network.
Absolutely.
Love it. Okay, cool. We know you're doing a lot of good stuff with companies, helping them get clear on their brand, right? The financial, technical strategy, help them become modern, right? And come into the current age. For anybody listening, be it an individual or a company leader, what's the best way for them to connect with you?
They can connect with me on LinkedIn. Just go to Michael Hammond and they can connect with me, DM me. I'll be more than happy to talk to them. They can also email me at mhammond, HAMMOND, at Next Level Advisors. There's no T in it, so it's NEXLEVELADVISORS.com. And they can go to our website, same URL, nextleveladvisors.com. I'd be more than happy to speak to them. DM me on LinkedIn, whatever it is. I'd love to pick up the phone and talk. We can have a discussion. It's a great fit. Awesome. If it's not, I'll be more than happy to share what I know in the industry. And any way that I can add value and give back is what it's all about.
Awesome. Well, I know you're making a big impact in the industry. It's great to be able to connect with you when we did last year. And anything I've ever heard when your name comes up, it's always with utmost respect and yeah, Michael knows his stuff. That's usually what everybody's saying. So
thank you very much, Jeff. I greatly appreciate that. I'm a huge fan of your podcast. You've been blazing the trail for quite some time. So if I can pick up some tips from what you're doing and follow that trail, I greatly appreciate you forging the way.
You bet. Thank you for being here. And listeners, as always, we appreciate you. You know what to do. If you like this episode, hey, leave us a review wherever you're listening to this. We appreciate you tuning in. We'll see you on the next one. Bye for now.